You can buy the technical skill, but you can't buy sales.
I mean, I do think, like, regardless of what the business model is, any small business you buy under 3 million in revenue, like the owner's primary role until you get it north of 3 to 5 million of revenue is doing sales.
And further, it's the only thing an owner can truly do to get themselves out of doing the tasks they don't want to.
Like, you want to find yourself in a fast growing market, because even if the product is bad or even if the team is bad, you could still build a pretty good company. But if you have the most amazing team and the most amazing product in a slow growing market, it's just an uphill battle.
All right, welcome back to The Intentional Owner. We have a special guest today, and I'm going to let him introduce himself right now because I don't want to mess up his last name.
Sure. Name is Andrew Gazdecki. I've been an entrepreneur pretty much my whole life. Started my first company coming out of college, and now I run a marketplace called acquire.com, and I help business owners sell their business.
Okay, so give us, Andrew, I mean, you've been around SMB, ETA, search, Twitter forever. I feel like you among us were all around during COVID when it was hot and going. Like, When you think of yourself, do you think of yourself as an ETA guy? Do you think of yourself as a startup guy? Do you think of yourself as like digital business guy? Like, how do you describe yourself at like a cocktail party?
Honestly, I usually say I'm in sales just to make it simple and easy to understand. But I would say I'm like a startup guy. I got into startups super young. I just wanted to start a business, and I'd look at TechCrunch every morning and see all the companies that were being launched or doing cool stuff. And I love technology, but I'm very much in the ETA space. But I would definitely say I'm like a startup guy.
I'm fascinated by the answer that you say you're a sales guy. I catch myself doing something similar because as soon as I try to explain simply what I actually do for a living, typically I lose people very quickly, or they'll relate it to something they know that's like nowhere near planet Earth of what I'm trying to describe. So it's just easier to say something else.
Yeah. With an entrepreneur, it's kind of weird because like if I describe my business, I'm like, oh, it's an online marketplace. You can buy and sell small tech companies. You walk this fine line of like, are you successful or completely bankrupt? And like, you're a total loser. And then I gotta like explain it. And a lot of what I do is sales. So I figure that makes sense.
Yeah, I mean, the startup founder, right? Like, you're doing two things. You're selling equity and you're selling, the product.
Yeah. Big part of the role.
All right. So give us a little bit of the run up of acquire.com. When you started it, it was obviously named differently to start when you made that shift over. And yeah, give us some company history.
Sure. Started the company in 2020. I started it after selling my first startup. I sold it to a private equity firm. It took me like 3 years. Probably should have hired a bank or something like that to help me with it, but I was chasing buyers around. I didn't know how acquisitions worked. I had 2 small angel investors in that business. They were super smart, but it felt like none of us really knew how acquisitions work. We kind of felt like you just wait for Google to show up with a giant check and act super hard to get when you get close to an offer. So I just thought there could be a lot of other startup founders like me that are looking to sell their business and don't necessarily know where to go or know what to do. So I launched MicroAcquire, now acquire.com. That was 2020. It was originally started as basically a side project. I didn't think it would really work, if I'm being honest. I thought it was a silly idea. And I just thought it was cool. I just want to help startup founders. It was completely free initially at launch. And it kind of took off during COVID. So I started focusing on that full time. Where it is today, we've done about 3,000 transactions. We've closed around $1 billion in transaction volume. Rebranded to acquire.com in January 2023, bought the domain for $250,000. The guy originally
I was going to ask that question.
Yeah, it's kind of a cool story. I had reached out to him just for fun because acquire, if it's affordable, we'll drop the micro. The guy wanted 800,000, and then I randomly got, which we said no to, obviously. And I got an email randomly when I was on vacation with my family saying, hey, I got to sell the domain. Are you still interested? And I just said, best I could do is 200,000. We landed at 240,000. I thought I got a great deal, an amazing deal. And I go back to my family and I'm saying, oh, I bought a domain for a great price, 240,000. It's amazing. And my family looked at me like, are you crazy? 240,000? That's a good deal. Like, you high or something?
That's a tough, yeah. Like I've never bought a domain like that, but then I think about it and I'm like, okay, with 240,000, I could just buy a bucket truck from my tree care contractor. So like, I feel like the acquire.com domain's got to be worth more than one bucket truck.
I would say it's probably worth at least 500K if I was being honest and subjective. I'd probably peg it at 500 or 600 domains, or excuse me, $1,000, because one word domains are super expensive and they're super rare.
It's a good point. Really good point. The .coms are, but it seems like these days it hasn't become ubiquitous for using non.com domains.
Yeah, you see like .io, you see .app and stuff like that. I mean, if you want to talk numbers, when we shifted over to acquire.com, we saw all of our conversion rates jump up like 50% from the trust and credibility just from the strong domain name. Average deal size went up, seller signups went up, buyer signups went up, both paid on both sides. So we could also like calculate like a clear return on investment from it.
You said like $1 billion of transaction volume on 3,000 transactions. So is that 300K per deal roughly?
Yeah, a lot of the deals that we do are pretty small. We'll do deals as small as 5K, 10K. You think like a small software project, handful of paying customers, and we'll do as large as, I think 18 million is our largest transaction. So there's kind of like two sides of the business. We have a marketplace where everything's automated. You list your business, you find your buyer. We have tools that generate letter of intent, asset purchase agreements. You flow into escrow and close. We market the opportunity to the hundreds of thousands of buyers on Acquire. And then on the other side, as the businesses get bigger and there's going to be more emotions and larger money at stake, we have an in-house advisory side where we'll work with buyers and sellers from the beginning on preparation and financial recasts and helping with negotiations and obviously closing and all that fun stuff.
And on the side of the business where you're an advisor, are you mostly representing sellers?
We only represent sellers.
Got it. Okay.
Yep.
So the entire business, acquire.com, is getting compensated by sellers, or on the one side of the business where you're a marketplace, both buyers and sellers pay to participate?
We charge both buyers and sellers, but only commissions to sellers. We have a yearly subscription to buyers to access deals. For example, we would go on Acquire, everything's basically a blind NDA. And then to sign the NDA and see who the business is and speak with the owner of the business, you would pay a small yearly fee. And then on the sell side, we charge 8 to 6% and scale down as the deal gets larger. And the reason we charge the buy side, when I initially launched MicroAcquire, I used to take listings live and talk with founders, and they'd have like 300 requests from buyers and they wouldn't know where to focus. And I'd go in with an Excel spreadsheet and say, this person's pretty legit. This person, I know they have cash on hand, stuff like that. And then I just thought, why don't I try to make money on this side and filter down the buyer list to, separate who's serious and who's just window shopping and stuff like that. But it's a good revenue stream.
It's the best way, right? To figure out who's serious is make them pay anything.
It really is. Because if you use like Biz Buy Sell or something like that, you will just be inundated with buyer requests. And I think it creates a lesser experience if you're a serious buyer, because you got to do what you can to stand out. But if you want to stand out as a buyer in other ways, we have verified funds. You can verify your ID as a buyer to prove that's really who you are. So those are some other things you can do outside of just paying.
When I think of acquire.com, I think everyone I've talked to in the world has been, in our world to be clear, has been like, oh, I got to disrupt Biz Buy Sell. Like there's got to be a better way to do it. And you're the only one I feel like who's come, pretty close to a true, like there's some really good businesses being created that are either seller focused or buyer focused, but you're kind of one of the few I've seen that are really trying to build just like the marketplace model. I'm curious how much of that was like an initial focus area is like, hey, how do we do Biz Buy Sell better, or coming at it from a totally different mentality?
Totally. I'm happy to chat about that. Like when I hear, because I've seen people do the same thing, like I'm disrupting Biz Buy Sell. It reminds me of disrupting Craigslist. We're going to have a prettier interface and we're going to have a more expensive business model and stuff like that. It's hard. It's a hard value proposition because business by itself just works. There's a ton of liquidity on the platform, has strong network connections. And I think for entrepreneurs that go down that path to disrupt them, if they're not thinking of like unique ways to get new inventory on the marketplace or increase liquidity on the marketplace, you could make an argument there's zero reason to use another platform. And what I did at Acquire was I noticed specifically for SaaS founders and software founders and startup founders, there wasn't really a marketplace for these businesses like Biz Buy Sell. And a lot of the businesses that we represent, we help sell, the buyer isn't obvious or the size of the business is too small for a traditional investment bank or advisory firm. So that was kind of like the opportunity that I saw available. I didn't think it was as large as it became. But I think if someone was looking to disrupt Biz Buy Sell, I would really niche down. I'd look at franchises or just car washes or something like that and have like I think one area that a lot of entrepreneurs get stuck is they focus heavily on the tools and we're going to make due diligence amazing and stuff like that. And like the due diligence tools are kind of useless if you still have really low quality supply. So just focusing on just having better supply and a niche focus, I think could work.
Yeah.
Kind of
ultimately,
a rant,
ultimately listings is what matters, right? You have to have the supply side.
You got to have that 100%. If you don't have that, you can go to all the tools in the world, but it doesn't matter.
And so for that reason, I think that's why a lot of SMB broker network sites have struggled because they're industry agnostic, for example, or maybe they're not focused certain size range. They have no way to stand out amongst sellers, right? Because I think isn't that what you need first is the inventory of sellers, and they refer their friends and they say, hey, I had a successful outcome here. You should list. And that's the snowball you have to get rolling first.
Yeah, it's like the typical marketplace challenge. You got to pick a side that you believe is the more valuable. And I would agree. Yeah. The seller side is going to be most valuable because when you have the seller side, the buyers usually will naturally come to the marketplace. It's not always the case. But then it's tricky. Like you might have sellers, but no buyers. So you got to focus on both. But I think there could be an interesting angle of like some clever way to get inventory onto the marketplace that isn't necessarily on Biz Buy Sell, some new inventory. So you have a reason to use both Biz Buy Sell and another marketplace.
You've really focused on these small SaaS, like online businesses, right? Which means that the buyer could truly be anywhere for the most part. Like, I'm curious, like if you had a guess, like what percentage of the deals do you think like have any employees?
That's a great question. I would say probably 50%. And out of that 50% that does have employees, I would say 25% of that, or like 50% of the 50% has 1 to 3 very minimal, just a handful of contractors. A lot of these businesses truly are just one founder made an interesting product. There's some organic growth involved in it where customers are finding the product and subscribing to it, using it without a lot of marketing. That's kind of the typical profile. But as the businesses get bigger, obviously there's a team, contractors, multiple co-founders, that sort of stuff. But I'd put it around like 50%.
And can you give any more stats around like the median target company listed? Just to get a sense for it?
Yeah, I can give you a sense. Like our average acquisition, it depends on the month because it'll sway if there's a larger transaction or just majority smaller transactions. But call it like $500,000 is probably the median transaction. Then in terms of like revenue size, if it's a $500,000 transaction, that'd be a business doing, call it like 100, 200,000 in net profit. Is that helpful? Sorry, I'm bad at stats.
So a business, let's back our way into it. This is actually feeling more like the SMB world than like the SaaS tech world. If the enterprise value, the purchase price of $500,000 and it's doing 200K of net profit, so it's trading for 2.5 times seller discretionary earnings, because I'm assuming most of these businesses like owner comp is added back, so it's SDE. So we're talking about just a small SMB acquisition, not any kind of like multiple on ARR, multiple on sales.
No, and that's actually really surprising to a lot of founders where they learn, or we explain to them that the buyers that we work with do not value businesses in the typical, we got acquired by Google for 100 times revenue or even 5 times revenue. We do not see that because the buyers that we work with, they're predominantly financial buyers. And so they're going to need a clear path to a return on investment. And you don't get there paying 5, 10 times revenue. Almost all the transactions we do are valued on a multiple of net profit.
Interesting. So, sorry, Kaustubh, I'm running over here, but I'm curious. Are the people generally buying companies on Acquire doing it? Are first of all, are they like individual people like you and me, or do they tend to be like company financial buyers? And are they doing it as a career shift? Like they want to go run it themselves as their full-time gig? Or is this a side hustle business marketplace?
Yeah, I would say about 60% of our buyers are going to be first-time buyer, individual buyers. So think like a VP at Stripe or something like that. They want to step into the role of CEO at a small tech company. That's our most common buyer profile by far. And then 20% on top of that would be traditional private equity. We only see that for larger transactions, never on the small ones, or sometimes on the small ones. But it's usually when we start to see, $500,000 or $1 million in net profit, that's when traditional private equity will step in. And then the other 20% would be strategic buyers, which we see a good amount of. If there's an interesting business in the same space, we work with some public companies. We've worked with a ton of different venture-backed startups, stuff like that. So 60, 20, 20. And then your second question. Question. Yeah, we see a lot of people quitting their jobs or have already quit their jobs. And this is something that they wanted to do in terms of pursuing entrepreneurship. Basically, ETA. And then we do see people having a full portfolio of small SaaS companies. So it just depends.
Interesting.
Yeah, it's a broader buyer universe and profile than I think I would have anticipated.
And I worry for your sake, not that you need any of this. You've clearly got a ton of, traction in the marketplace, but in the called self-funded SMB, self-funded ETA community, I worry that like the perception is this is where you go to buy the micro SaaS business doing $50K of annual revenue, and you're doing it as like a side job. And it clearly isn't the case.
No, we do a good amount of transactions with, SBA financing involved as well.
Nice.
I think maybe
Really
from like 2020, 2021, when I first started the company, that was more of the case. But as we've added more services and maybe added, a layer of professionalism on the advisory front for businesses that could support, call it a 100, 200K in net profit. Because our threshold for advisory services is 100K in net profit. So we won't represent businesses that are smaller than that. So I think that's helped facilitate these types of transactions.
Got it. AKA you're offering seller help.
Yeah, I definitely think of it from when I was a searcher, right? And I was a searcher in 2021, right? Like, and so I think I've anchored falsely to that because I haven't been using the platform actively since then. And so that's really interesting, right? Like this should be if you are a searcher, like you should be using this as part of your ways of finding listings.
Yeah, 100%. The only caveat I would probably give on that is they are still technology companies. So I think there's a little bit of a learning curve compared to, every business has a huge learning curve and extremely difficult to operate. But without, say, a technical background or something like that, I think running a software company could maybe be a steeper challenge. So just
good point.
Throwing that out there.
Yeah. I'm trying to convince my dad, who is he's about to start year 32 at Microsoft. So he's really,
nice.
But like I think he's reaching that point in his career where he's still not ready to retire, but like, he wants something interesting to do. And I'm saying like, hey, you should go buy one of these businesses.
You know what? One other thing I'll add too is a lot of the businesses that we'll do with SBA financing specifically are usually service businesses. So think agencies, digital marketing companies. We did one really interesting design as a service company this past month. Those are great acquisitions for maybe people that aren't as technically inclined for someone to run, say, a data SaaS or something like that.
Right. There's a certain type of business which is technology is the moat or the differentiator. To me, that feels really hard to buy as a new buyer versus a very well technology enabled business that has a service, right? Like that's something you can buy as a new buyer and actually go deliver that service.
Yeah, I would agree with that.
Okay. I have a lot more questions now about Andrew, the entrepreneur. Sam, do you have more questions about Acquire first?
That's exactly where I was hoping you'd go. Let's do it.
Okay. All right, let's do it. So Andrew, first tell us about the first startup and like how old were you when you started it? Kind of what was it? What and why? Like, did you go to college? Did you skip college? Like tell us your early career path.
Yeah, I went to Chico State. We call it the Harvard of the West.
Nice.
It's a fine university. Candidly, I went there because I wanted to party. I didn't know what I wanted to do in my career. And I heard Chico State was a lot of fun, and it ended up being a ton of fun. I met my wife there. Great school. All my friends are there from there as well.
Is that in SoCal?
It's in Northern California. It's about 3 hours from the Bay, maybe an hour and a half from Sacramento.
Okay, cool.
Yeah, so I went there. I knew I wanted to be an entrepreneur, but figured, let's give college a shot. Ended up enrolling in all the entrepreneur clubs, stuff like that, really networking with other entrepreneurs on campus. And I started doing this thing where I would start a new business every summer. I started this job board that connected mobile developers with business owners right when the iPhone came out. And I'm not technical myself, so I needed like a simple business where my job was to market the business. Like, do you have an iPhone app idea? We'll come to this marketplace, enter in your idea, and you'll get quotes. And we get 10% of the project when it was completed. That business started generating some pretty good cash for college, at least. And I ended up selling that business to build the company that I focused on for 8 years, which was called Business Apps. And the reason I sold the job board was I kept seeing business owners post essentially the same job requirement over and over. These were hotels and high-end restaurants. I would say I'd like a mobile app that would show my menu, have a loyalty program, easy reservations, stuff like that. They were paying like $50,000 to build these mobile apps because this is when iPhone just came out and no one knew how to really develop mobile apps or what their potential was. So I sold the job board to build a template where I could customize images and just have the same features over and over and over and just sell basically skin versions of the mobile app. And that ended up being this company called Business Apps, which was a drag and drop mobile app builder for small businesses. We ended up creating more mobile apps than any other company in the world. The business model was we partnered with web design agencies and marketing companies where we would white label the software so they can build mobile apps for their clients. Yeah, I got the business to about $10 million. I raised $100K for that business and then sold it to a private equity company when I was 29.
Wow. That's really cool.
It was a fun ride. I got super lucky. I was in the right place at the right time.
To be clear, so the learnings were direct, but from the job board, mobile job board, to what problem you were solving in your actual business, you sort of developed the product after what you were seeing in the job board. So one of those situations where kind of knowing you were going to be an entrepreneur for the long haul paid off because it gave you the runway, the timing, the time frame to go build around a new problem you found running your first business.
Yeah, my idea at the time was to just increase my surface area luck. I knew the iPhone was going to be big. And so I just wanted something that got me in that space. And then the job board gave me an idea for the main business. So I think the lesson there is like, even if you don't know where it's going to go, just kind of create something to help you see what's going on and you might find something.
Yeah, I mean, the sense I get is you kind of have a nose for revenue, right? Like you can kind of see where revenue is moving.
For that business, if I'm being completely honest, it was a tidal wave shift. I've never felt product market fit as strong as that company. And again, I wasn't technical. I didn't build a great product. It barely worked. But because there was so much demand when the initial like clunky version that you press a button, it crashes and like, oh, we'll fix that in a month, but it still is there. People were still buying it. People were still subscribing. It was in every publication. TechCrunch, New York Times, Wall Street Journal. We were on Inc.'s fastest growing companies 2 years in a row. I can't do that again. No way.
It reminds me
Me-
though of, like we talk about in private, when I was in private equity, we talk all the time about this idea that like a bad industry, good manager, like the industry still wins. Right. And so like
Same concept.
being in a space with real tailwinds, like it's just so much easier.
Oh my gosh. I've talked about this with friends a ton of times. Just the tailwinds, when you find it, like you want to find yourself in a fast growing market, because even if the product is bad or even if the team is bad, you could still build a pretty good company. But if you have the most amazing team and the most amazing product in a slow growing market, it's just an uphill battle. So we were just in one of the fastest growing, markets. It was mobile. There's internet, mobile, and then you can argue it, blockchain, AI. It was one of those paradigm shifts.
This episode is brought to you by the Kalmar Group, a recruitment firm that specializes in placing leaders in the SMB community. Most small business owners treat hiring like a side project. Post on a job board, text a few friends, and hope for the best. But when it comes to leadership roles, hope isn't a strategy. The truth is, your people are your most valuable asset, and building the right leadership team requires more than luck. It takes a proven process. That's where the Kalmar Group comes in. They help owners like you find exceptional leaders in operations, sales, finance, and marketing, from managers to the C-suite, so you can stop guessing and start growing. Whether you're running a long-standing business or just acquired one through ETA, change is constant. Key people leave, new opportunities arrive, and when they do, the Kalmar Group is there to help you hire with clarity, confidence, and speed. You hire an expert for legal, bookkeeping, taxes, etc., so why are you flying solo on recruiting and hiring? With clients across the country and a track record of results, Kalmar doesn't just fill roles, they raise the bar for how you hire. Led by founder Dylan Scroggins, a 15-year recruiting veteran, the Kalmar Group exists to help business owners stop settling for good enough and start hiring the kind of leaders who truly move the needle. To learn more, visit thekalmargroup.com or connect with Dylan directly. More details are in the show notes. So to be clear, though, you're saying it might not ever happen again, but you got into like the SMB, M&A, brokerage, networking industry, which is a very fast growing, tide is rising industry. Like, are you just like a soothsayer here, or do we attribute this to 2 rounds of luck? Seriously.
Maybe my friends actually call me Gazluck, so maybe I am more lucky than others. So I don't know.
Well, I mean, to be clear, I guess don't want to get too much back into Acquire, but I guess you learned about the idea, what problem Acquire solves you had when you went to sell that business, right? You went to transact with a private equity firm or whatever buyer. You had no place to go, didn't really know how to do it. And then you created a business after you went through the problem to solve that problem for others. So, I mean, isn't like the obvious next question is like, in your growing of Acquire, you're learning a new problem that you can go solve. What's that new problem?
You can't tell us that. That's the secret
no,
sauce.
Honestly, I don't know. I think
After another outcome like this, he's not going to have to work. So share an idea with a couple guys here.
I think there's some interesting stuff around like SaaS data and metrics and stuff like that. We recently built like a Stripe dashboard where it calculates all your metrics and gives you like an automated valuation. I think that's cool, but I can't see it being like a massive business. I mean, I always joke if I wasn't running Acquire, I'd probably be rolling up small software companies on Acquire. I think that's a really interesting business and would be fun to operate.
Meaning like go buy a dozen 1 to 3 person SaaS software businesses and have like a collective holdco with a few people able to service all of them.
Yeah, I think there's a lot of really good software companies that I see where, again, they're pretty small. Maybe they have 1 marketing channel stood up, but there's a really good product. There's always these situations where it's a really strong technical founder with really weak distribution. And I think if you are able to find really good products and have a strategy to bring them in where distribution is really strong, either through cross-selling where maybe you get one subscription and access to a ton of different products, or you just find one lever that you're really good at pulling that hasn't been pulled inside each business. I think that's pretty cool. I've seen a couple of people pulling it off, and I'm always looking from afar, a little bit jealous.
Mm-hmm.
That is neat.
I mean, I think back to, so if you go back to your mobile app developer job board business, right? Like, even though you have a tailwind on either side there, like there are more people learning to be mobile app developers and there are tons of companies that want mobile app developers. Like, how did you, you're in college, you're not that technical, it sounds like how did you get that in front of the buy and sell side of that marketplace?
Yeah, to build the marketplace, I actually bought a script before like vibe coding and no code platforms and stuff like that. You used to be able to buy like a Upwork.com script or buy a Facebook.com script. So I bought something like that for like $1,000, put it on a server. And then one winter break, I just stayed in my parents' house and literally every single blog I could find about iPhone apps in the comments, when comments were a thing, I just, hey, this is the founder of phonefreelancer.com. Do you have an app idea? Go here. And I probably made like 5,000 comments, like a serious amount. And then it started to pick up. And then and this is when, to get the word out about your company, press was really big. Now you have Twitter and LinkedIn where you can share your story and have a TikTok and stuff like that. But 10, 15 years ago, like it had to be through the press because these networks weren't really built up. So I started reaching out to reporters and kind of pitching in. We got featured in a few small little blogs, like iPhone specific ones. So just hustling reporters and hustling comments on articles.
See, that's not luck, right? Like that's finding distribution.
Yeah, I mean, you definitely have to hustle for sure. Yeah, I agree with you.
And
Right.
what is the script part? Sorry, what does that mean?
I was just
We
saying,
are non-technical founders.
you can buy like a code script, like something where all the feature, like imagine you want to make, like if you use like freelancer.com or Upwork.
I use Upwork, yeah.
Yeah, you can just buy the platform, all the features, the messaging system, the ability to sign up, create listings, and you could brand it to whatever you wanted to do. So people would basically clone Upwork.com.
You're buying the code that's underneath a website that you really like.
Right.
Yeah, and then you could brand it however you want. You can do justdesigners.com or something like that. You got like a really niche marketplace.
Right. It's like the pre like WordPress templates.
Exactly.
Right? Like,
yeah.
Yeah. Okay, I get it now. Well, that sounds like also something I wouldn't have been able to do when I was in college. So,
like, I guess, the power of being broke. I didn't want to get a job and I didn't want to be broke.
It's true.
Why didn't you want to get a job? That's what I'm curious. Like, I feel like I don't know. Like, I went a pretty traditional path, right? I went and got a job in finance and did that for a while. And then I was like, hey, actually, this isn't it. Like, you knew going into Chico State, hey, I want to be an entrepreneur. You took those classes. Like, is there like a parent that is that way? Is there some mentor that way? Like, what got you the bug in the first place?
I wanted to be rich. In San Clemente growing up, I didn't grow up with a lot of money. I was actually born in Detroit. My parents wanted to do the California thing, so they moved us out to San Clemente at age 5, which was awesome. But San Clemente is a very affluent town. So growing up, we had a great upbringing. My parents were amazing. But my friends' houses were big and they had the Escalade and their parents were business owners. So I'd always talk to my friends' parents and say, how do you get all this stuff? What's going on? Why does he get all these skateboards for Christmas? And then I just kind of quickly learned if you want to make a lot of money, entrepreneurship is a great path to go down. And then I just started studying it like it was my favorite sport, basically. I was reading all the books. When I graduated college, my mom gave me this like picture book with like photos of me, like all the businesses I started like in high school and even middle school, the stuff I was selling. So I caught the bug super early just from being around successful parents.
Do you remember if those successful parents, a lot of them had more traditional jobs? Or are you just sort of remembering the ones that said what they did, it sparked an interest in your mind? You've got a former lawyer and a former private equity professional here wondering if we took the right path.
I'm sure I cherry picked them. Like I remember one of my friend's dads was an attorney and he had a really nice place. But one of my friend's parents had like a home entertainment system business. One of my friend's parents built like track homes. One was like, I mean, there's a few parents just like that with interesting small businesses, but there was both for sure.
Okay, so what's the day in the life of Andrew like? Let's call it in one of your prior startups that was when you had yet to have a ton of traction, not a big exit, maybe like a more hustle phase of your entrepreneurial journey. And then what's a day in the life or your routine like now, and family, spouse, like how do you balance being an entrepreneur with being you?
Yeah. So with business apps, when we were in San Francisco, I was kind of a workaholic. Just had a girlfriend and work, and that was kind of it. I'd get up at, call it 5 a.m. I'd be at the office by 6 a.m. I would do customer support every single weekend. I'd go in, I'd clear out the inbox. One day I just want to update all the tutorial videos. So I'd record videos for like 8 hours. A typical day, like a few meetings, a few sales calls, a few hours of support, just kind of doing everything. I was basically the janitor. I'd literally clean our bathroom and stuff like that. And then today I would say the contrast is I'm much more focused on supporting the team and being the manager of the machine rather than doing everything in the company. That's one thing I've noticed about myself is I think on a personal level, I think once you have an exit, you, at least for me, you lose a little bit of kind of that fire. Like I need to do everything, so I like to work out every single morning. I go to the gym at 6 a.m. I like to hang out with my son before he goes to school. I like to pick my son up when he gets off school every single day. So those things are important to me now, and they weren't, I didn't have a son at my previous company, but that's what I like to be able to do rather than, grind out for an extra, few percent of growth. But typical day, I wake up, I go to the gym, get my son ready for school, have a few morning meetings, and then I'm usually advising clients. I'm usually jumping on calls with clients, things are going. We'll typically give out our cell phone number, so that can be a few fire drills here and there. And then when I'm not on advisory calls, I'm usually just marketing the business, doing stuff that I really enjoy. I really love social media marketing. I love coming on podcasts like this. That's the stuff that really gives me energy. There's a cool exercise where you can look at your calendar and circle all the stuff in red that doesn't give you energy and then circle all the stuff in green that does. And then as a founder, just focus on the green stuff. So I try to do that, just stuff that I enjoy, talking to clients, minimal meetings with the team, and then lots of marketing.
And are you running the business as CEO in a traditional sense, or do you have sort of a COO integrator if you're an EOS, disciple? Who are your senior leaders that help you do that now?
Yeah, we have VP of engineering, VP of acquisitions. VP of acquisitions, Rose Romaine, she's great. She helps me manage support and client success, the general operations and the nuts and bolts of operating the business, especially the people side. So to answer your question, yeah, I would say, I like to share that a lot more than I used to.
And you don't necessarily have an M&A background. So is she also the one that has taught other advisors how to support clients in doing transactions? Or like, how did you get that skill set embedded in your business?
Yeah, we've hired a few business brokers internally. They're no longer with the company. We had one in-house attorney as well with M&A experience. So we kind of learned from them and through osmosis. But if I'm being honest, it's not as hard as I think some people think. It's really just sales. It's learning negotiations, following to a process, creating competition during a transaction, and just being easy to work with.
Dang, we made it more complicated.
I totally agree. M&A is not that hard. Yeah, no, that's right.
It's scary if you haven't done it though. But I think once you go through it a couple of times, you kind of get the gist of it. There's always different edge cases. So we have some people on call, especially on the legal side or just situational, that we can, phone a friend. But for the most part, M&A tastes like chicken.
What's on your calendar right now that you would circle in red, but you haven't been able to get off the calendar?
Honestly, probably nothing. Honestly, if I don't want to do it, I generally will take it off. So I try to be really protective of the calendar. That was one of my goals this year, was managing my time a lot better, because to get now Acquire off the ground, I was literally doing everything. I was sitting on live chat. I was reviewing the listings to prove them on the marketplace. I was writing the newsletters. I was doing buyer and seller calls. I kind of burned myself out a little bit during COVID and markets crashes. It was a lot. And so I took a step back and I have been slowly kind of moving towards, my ideal operating system or whatever we want to call it. So honestly, yeah, probably nothing. I think that stuff's super important.
So tell us about that though. Tell us about the burnout. Like when was that happening and how did you realize?
And to be clear, you burned out after having a liquidity event in your prior business.
Yeah. So this was, I'd say I burned out, 2023 and then definitely 2024 last year as well. I just felt like I was pushing the boulder up the hill all by myself. And, when you're running a business, there's a lot of expectations and just stressful things that happen. And I just didn't want to, I'm 37. I didn't want to live like that anymore because I literally felt like I'd just been grinding for like 15 years. So I took a step back, started working with a CEO coach. He gave me just some tips like the exercise I just described, just being more thoughtful around what I, want and don't want in my day-to-day life. Life has been amazing. I couldn't be happier, but it's definitely a process and you need to, identify when it's happening. But I think the big signals for me was I used to work out a lot at business apps. And then after COVID, stopped going to the gym, stopped working out. And then it gets to the point where like going to the gym once is like this, this huge challenge. I just couldn't get in, didn't have the energy. So I took a pause, started going back to the gym, focusing on health and stuff like that a lot more.
This episode is brought to you by Aspen HR. Are you sick and tired of dealing with rising health insurance costs? Did you just acquire a business and discover the employee handbook hasn't been updated in 5 years? Do you think there is an opportunity to make your payroll process more efficient? Or are you tired of dealing with slow responses and payroll errors from your current vendor? If you want to professionalize your HR, benefits, and payroll function, reach out to Aspen HR. Run by a former searcher, Mark Sinatra, Aspen HR is the white glove PEO for search operators. Email sales@aspenhr.com today. And for our listeners, Mark will offer you a complimentary HR due diligence assessment.
Yeah, I guess the part that's always interesting to me is it feels like business owners, they end up in that burnout stage, but like people who choose to be business owners are so good at grinding, right? Like that's part of what makes you a good business owner is like, it's really hard to differentiate between like what's too hard and what's like just hard and like, reasonable hard. And so that's like, I'm always curious to understand how somebody noticed like, hey, this is too hard. I need to make a shift.
Yeah, I think when your health starts getting into it, I didn't have like a health scare or anything like that, but I just was, getting super skinny and like wasn't eating good and I just wasn't feeling good, wasn't sleeping great. Nothing major, but I think that stuff compounds if you just do it for decades. That can give you health issues. And so I just didn't want to go down that path.
We talk about that a ton, Kaustubh and I, and as business owners, operators, we can grind with the best of them, but we misprioritize, or maybe I'll speak to, about myself. I can misprioritize and layer on a checklist at work that's way too long. It's really, and then kids, it's really easy to like punt the health stuff to later today, which inevitably means tomorrow, which means the weekend. And that you can do that for a while. Like you can do that for the length of a deal or a season, but man, you cannot do that forever.
No, and that's basically what I was doing. Like tons of caffeine, not eating when you're hungry, not like necessarily following a good diet or anything like that. It catches up to you. Again, I'm 37 now, so I get tired now, and so I want to get some energy back.
Yeah, I think part of the, like Sam and I came from deal world. So I think we kind of had this false idea that like, oh yeah, we just sprint hard at a deal. And then when the deal is done, like you have your time to like get your life back in order. But as a business owner, that like you're never out of it, right? It's just a long marathon. So like we've had to actually, like this is what we talk about all the time, on our, just when it's just the two of us on a podcast is like, how are we trying to find some balance?
Yeah, I think, another angle to it as well is, if you're going to start a business, you generally do it because you want a better life, you want to enjoy things more. Maybe that could be financially, or that could mean more time. And, if you just never think to yourself, like, how do I actually, get what I'm actually working for? you kind of end up in this just hamster wheel where you're just grinding yourself to death and you're super unhappy. And the ironic part is it's all your fault too. It's like you created this thing that you're running around all the time. You could stop, you could slow down. But I think a lot of business owners could benefit, like I did, by just kind of taking a step back of it. What's really important to me is it, becoming a trillionaire, billionaire, Because if it is, you're gonna have to work 24/7 and keep grinding, keep running. But if you're maybe a few steps below that and you want to spend time with family and feel good and healthy, etc., let's prioritize those things first.
Which is so simple.
Yeah, when you realize that, so you got the CEO coach, what were the shifts you made in the business itself?
A lot more delegating, giving people room to kind of forge their path in the business. Before, I would essentially be involved in every meeting, every decision, probably micromanaging, I think is probably a way to describe it. And now I'm much more, hands off. I'm only involved if I absolutely need to be. I'm okay if certain parts of the business are run differently or decisions are made that I may not 100% agree with. There's obviously a point where I'll step in, but just allowing things to happen in the business that I'm not in control of. So I think before I would get like anxiety if like I wasn't in control of literally everything. And then now I've learned to take a step back and be comfortable and excited when other people are stepping up and making changes in the business or, getting things done, that basically pointing out problems before, they really become what.
How has that impacted the business?
This is our best year so far. We've grown the company substantially. We're operating profitably. I'd like to think it's, just the start, but it's been a big shift, especially I think for the team as well, in terms of enjoyment at the company, being able to put their mark on certain aspects. But it's been huge because as a founder and a business owner, you are sometimes the main bottleneck where, if you need to be involved in every single decision, things just naturally move slower. Like marketing team has a conversation with product and can't move forward until Andrew's looped in. You just kind of slow things down. So just being able to actively work on things that need to be addressed, I think has been a huge unlock.
I think that's it's been interesting for me this year. It's like I finally have enough P&L to have made some, those overhead hires, like an operations manager. And it's like, oh, I'm actually better at my job too, right? If I just focus on the 4 things that I should be focusing on and let somebody else focus on like the 4 other things, like they do their 4 better, I do my 4 better, and it's overall better for the business.
Yeah. Like for me, when I focus on marketing and I have more time to, dig into everything that we're working on, like me as well, able to have more impact in those areas. And I'm not the best people manager. I'm pretty bad. I just don't enjoy it. At least at this stage of my life, I don't. So to hand that over to someone that truly enjoys it and that has, the energy and the time for things that I may not have energy and time for is great.
So I don't know, Kaustubh, if you want to go here yet, but like Andrew, what's your why, or maybe what is your goal for Acquire? Obviously it'll survive you because it's got a great brand and a track record now. So do you have a plan, or are you kind of living more in the moment, trying to create sustainability and give yourself a bunch of runway on your ownership?
It's a good question. I don't have a good answer for that question. I think for this year, it's been big for us to shift towards profitability and be more in control of our own destiny. That's been hugely rewarding to go after. But I love the business. Sometimes I think, where is this going? But I love operating the company. It's super fun and rewarding to, it sounds cheesy, but be with founders when they have that huge moment of success in their lives. And you kind of get to do that like every other day, and they're popping champagne or they're FaceTiming you in when they're signing a purchase agreement with their parents. Like it's really, really rewarding. So I think maybe from a personal side of it, I just don't know what else I would rather do. Like it's pretty awesome, and it pays well, and so it's a win-win-win across the board. So that's honestly the far out as I've thought it.
Man, I think of that like so much can be just game selection, right? And this is like there's these whole laundry list of jobs and businesses, like property management is a good example, right? Where you can really only screw up. Like baseline is things go okay, and then mistakes happen, and the landlords are angry at you as a property manager or whatever, right? But like being able to find a business where, hey, if things go well, they are congratulating you or they're thanking you, like that's hard to come by actually.
It's so cool. Like I'll go on podcasts like this with some of the people that sell on the platform all the time. And they just say like the most incredible things. And again, we just made the platform and they ultimately made the business. And that's really what sold, in the transaction. It was their business and their hard work. But just to be a small part of their success story is pretty cool.
It is, no doubt. I think I've been in a handful of businesses that only have downside. So you just get so used to, I don't know, like not having those days where it reminds you of the greater purpose in your job and your ownership. So it's fun to see somebody get to experience that upside. And that's kind of the nature of the deal business, to be clear. Kaustubh, you and I both, we left that. But I guess, Andrew, like, you're in the deal business, but your life doesn't swing up and down based on a singular deal. You're managing a business that manages the deal business. So that's nice. You're one layer removed.
Yeah, that's true. And I'd say we're very transactional as well. I mean, we have, 1 or 2 closes per day. So we don't have this like huge, like up and down lumpy revenue. It's very, consistent.
Very cool.
Yeah, that's like the dream. You get like the dopamine hits of closes, but they happen so consistently that like you're not feeling the roller coaster as much. That's pretty sweet.
Yeah, because I remember a few years ago when we'd have like some transactions fall through or deals would drop, it was just devastating, just on both sides. But now I think we've really refined our process and it's more consistent. So it's less whiplashy.
For sure. I'm curious, do you have leverage on your business the way many of us do on ours?
What do you mean?
Like debt. Do you have actual debt in Acquire? Like, I'm guessing not. You haven't needed to do that in order to build. You've been able to cash flow and reinvest or maybe take on some investor equity. Like, you don't have to live under the gun of bank debt or...
No, we have a very interesting financial situation. So we raised $15 million during COVID, and we've returned 10 million of the 15, and we're operating profitably.
Got it. So you are, would you call it like VC backed or how would you
VC backed? Well, I don't know what you describe it now. This happened this year because last year I decided, I didn't want to try, or did I believe this could be a multi-billion-dollar company? And we raised money during COVID when the terms were crazy and everyone was throwing money at any sort of business. And I just had a lot of cash on hand given that we hadn't spent it. So I thought it'd be good for shareholders and everyone involved in the company to get it profitable and operate on a dividend model rather than trying to go for broke and burn all the cash. So I went back to investors, essentially renegotiated new terms with them, returned the cash, and we actually just did our first dividend about 2 weeks ago.
Very cool.
Wow.
Yeah, so that was huge.
Cool.
You're
That
probably the only
rewarding.
portfolio company in all those VC funds that have returned any cash yet. So,
it's an interesting spot to be in because it's true. Yeah, like to return cash it's kind of uncharted territory for like everyone involved. But it's the right thing to do if you're not, truly going for the public company IPO and you find yourself in a situation where you raise a bunch of cash and you still have a lot of it. Yeah, you should return it.
We're going to interview him in a year and he's going to be saying he did a div recap.
Yeah. That's the thing. I feel like the VC funds, they don't even have somebody on staff to like process dividends coming in.
It's complicated because we raised from about 100 different investors. So sending out, but they're through like, there's investors of the investors. So it's not like 100 wires that you send out. But yeah, it's complicated. You're like, it's math and making sure it's all correct.
Yep. You've learned how to do a funds flow?
Barely. Barely.
Okay, so you've seen a bunch of people transact. And by the way, Kaustubh and we probably spend more time with buyers than with sellers. We come from the self-funded ETA community. So like our peers are people going out. They'd go to your site and buy a business. And then I teach at SM Bootcamp cohorts of people who are going out to acquire. Not your site, but to acquire a small business. What would you tell them? And I don't care what it is, like in how they search or in how they position themselves or maybe what they're looking for. But when it comes to working with sellers who interact with buyers, how would you counsel buyers to be better at that job?
So the question is basically, how would I advise buyers to
Be better
communicate
buyers. Yeah.
better buyers? I would say, my advice here is going to be a little biased because you can do this on Acquire, but I'd say buy a small app first, like 5-10K, just go through the motions, get some acquisition experience, like wrap your head around everything. Make sure that's like what you really want to do rather than, going out and acquiring something massive to start. Because then when you talk to a seller, you're able to come from a position of experience and credibility, because there's a lot of buyers competing for the best deals. And so being able to separate yourself from the pack, I think, is huge. And there's other ways to do it. You don't have to buy something small and gain experience, but being able to show funds that you have on hand. When you reach out to sellers, don't do it in mass. Don't just copy and paste messages. Have tailored messages about what stood out about the business that made you interested in reaching out. Have specific questions. Review the whole data room. Like, look at all the materials and then ask to see things that aren't in there. For example, don't copy and paste, hey, where's your P&L on this, when it's clearly right there. I think those alone can go a long way. And then just don't be an asshole too. That's very broad advice, but you'd be surprised, and you guys won't be surprised, but just how many transactions are won just from a buyer and seller getting along really, really well, even when the price isn't the highest.
Yeah, trust kills deals or makes deals, right?
Yeah.
You have to have because like at the end of the day, both sides are taking a big risk on the transaction. So you need to, everyone's making a leap of faith.
Yeah.
Sam, new idea, by the way, SM Bootcamp, you at Pursuant, you need to go buy like 6 apps on Acquire. And then every time, people sign up for SM Bootcamp, after the bootcamp is done, they get to run one of the apps for like a 6-month tenure until the next bootcamp, and then they hand it off to the next cohort.
I've actually done that before with different contexts. One time we did like this Twitter giveaway where we were like, hey, there's all these 5K businesses on Acquire. Who wants one? And then all these other guys start chipping in 5K. I'll put in 5K. Long story short, it ended up being a public issuance of shares or something like that. I had to get notarized. Spent like 10K on legal bills because of it. But we pulled like 10 people's money together for 50K.
No good deed goes unpunished.
No. And so that 50K was used to buy like a little Shopify app. And I mentored this kid every week for about a year to grow it. And he did okay. But then when he went to sell it, everyone that invested was like, oh no, I didn't give it to you. Like, I want my money back. So he ended up walking away with like 5K or something like that. So be careful what you get yourself into.
No, Sam, here there's no, you're not giving away the business. You're buying it for Pursuant, but you're letting people run it as an experience if they want to decide to be a searcher or not.
I'm just glad I know how to spell app, let alone like run one. I don't even know what that means.
It's just sales, man. The only job is sales.
That's
there
true.
we go. I agree with that. You can buy the technical skill, but you can't buy sales.
I mean, I do think, like, regardless of what the business model is, any small business you buy under 3 million in revenue, like the owner's primary role until you get it north of 3 to 5 million of revenue is doing sales.
I would agree with that.
And further, it's the only thing an owner can truly do to get themselves out of doing the tasks they don't want to, is to sell and have enough P&L bandwidth to. Anyway, it's funny how that works.
By the way, this is a little off topic, but last week was my birthday. And on my birthday, I kind of played myself. I forgot I had to give a bid to the city contract, and like they followed up. And I was like, oh my God, okay, I'll get it to you by end of day. So I spent like half my day on my birthday, like trying to put together 5 tree removal bids for them. And I was just remembering to like 5 years ago when I was in PE, and I also got my birthday blown up, but that was like blown up over building like an investment deck for like a big LP or something like that. And I was like, you know what? Like, I think I preferred this version of a blow up.
Well, happy belated birthday.
Oh, thank you. Thank you.
Yeah. Tell us how old you are.
Ripe old age of 32.
Wow. God, I'm jealous. What's funny is you get like to college and in your first job and time isn't moving that fast. And then something happened. It must have been having kids. 30s are like absolute so fast.
It's true.
Anyway.
Cool.
Anything else, Kaustubh?
I'm good there. Andrew, anything that is burning you want to get off your chest?
No, this has been a ton of fun. I appreciate you guys. This has been fun.
Cool.
Congrats
well, thank
on
you
your
so
success.
much for. Yeah, appreciate
Thank
it.
you. Same to you guys.